Welcome to the deep dive.
Okay, let's unpack this. You sent us a really fascinating stack of sources about navigating the room rental market in Dubai. You see that skyline, right? The
Yeah.
Burj Khalifa, all the incredible architecture, and you think, wow, amazing place. But then reality bites. You actually have to find somewhere to live. And specifically, yeah, finding a room to rent, it's not just finding a bed, is it?
No, not at all. It's way more complex than just picking a spot on a map.
Yeah.
It's really tied into these big global economic forces, the local regulations, and honestly, a kind of strategic thinking, the kind you'd normally use for like an investment portfolio.
No way.
And that comes through so clearly in the material you shared, especially the insights from Dr. Pooyan Ghamari, the Swiss economist. He really frames renting a room there less as just getting shelter and more as an economic move, an investment strategy almost. Exactly. And that's what we want to dig into today using your sources. We're aiming to go beyond the usual tips, finding a tidy flatmate or whatever. We're looking at the core mechanics of this market, trying to understand how you find a room that's not just livable, but actually economically smart.
Makes sense. It's a unique environment.
So let's start there. What makes Dubai's rental market so different? Your sources point to it being almost like a global test lab.
Yeah, what's fascinating, and your sources really highlight this, is how Dubai functions almost like, a living laboratory for urban economics. I mean, when over 88% of your population are expats,
Yeah.
the usual rules they don't quite fit.
Yep.
The market isn't really driven by local wages going up or down like in many cities. It's much more about these surges of international money, regulations designed specifically to pull in global talent, and of course, the tax-free incentives. That's a huge draw.
Right. And you see that layered system your sources talked about because people are often there for specific projects or business cycles. So you get everything from like monthly shared rooms right up to huge corporate leases for whole floors.
Yeah.
Yeah.
The short-term mobility, it creates a lot of churn, volatility, you could say, but also opportunity if you actually understand the patterns. Look at what happened around Expo 2020 or the growth after COVID, which your material mentions. Landlords saw all these digital nomads, temporary workers coming in, and boom, they started converting apartments into room-by-room rentals. It was a direct response to how work was changing globally.
And the whole smart city thing, the digital infrastructure focus, your sources mention that too. That's not just buzzwords, is it?
No, it directly shapes where people want to live.
Oh,
It's
okay.
boosting demand in areas maybe once seen as mid-range, places like El Barsha, Dubai Hills, JVC, Silicon Oasis. As they get better connected, digitally smarter, they appeal more to certain renters. So these areas, as your material shows, you see the micro-level housing stuff being shaped directly by these big macro factors and government plans. It's all connected.
Right. So it's definitely complex. But Dr. Gamari, in the material you sent, he really stresses that understanding the key economic forces is, vital if you want to find actual value.
Absolutely. It's not just about scrolling listings endlessly. It's about timing, understanding the context, having a bit of foresight, applying that economic lens, basically.
Okay, let's dive into those forces then. Supply and demand first. Sounds basic, but your sources say it works differently in Dubai.
It does have specific nuances, yeah. Your material gives good examples. Think about JVC or Business Bay. The rental markets there, they have clear seasonal swings. And it's not random. It ties into job cycles, tourism seasons, even visa rule changes. Like, you often find a bit more wiggle room, maybe more negotiation power during the hottest summer months when people travel. Then compare that to late August, September, when everyone's arriving for new jobs or schools. Timing your search right could literally save you decent money over a year.
Okay, here's where it gets really interesting based on your sources. The interest rate environment. How on earth does something the U.S. Federal Reserve does affect my rent in, say, Dubai Marina?
Well, the key is the peg. The UAE dirham is pegged to the U.S. dollar. So when the Fed in the U.S. adjusts its interest rates, the UAE central bank usually follows almost immediately to keep that peg stable.
Okay.
So if rates go up, it gets more expensive to get a mortgage, to buy property in Dubai. And what happens then? Fewer buyers, more people needing to rent.
Increases demand.
Exactly. Increases demand in the rental market, and that pushes prices up. It's a direct link.
Go ahead.
Global money policy hitting your local rent. It's not just for big investors. It hits renters too.
Wow. Okay. That's a powerful connection. So beyond global rates, what about local rules? Regulatory policies like the golden visa, remote work permits, those things.
Well, absolutely. Your sources pick up on these because they actually shift who is renting and what they're looking for. Take the golden visa holders. Often higher net worth, attracted by the long-term stay. They tend to want larger, more private places.
Right.
So that shifts some demand away from, say, shared rooms, potentially affecting that sub-market, while boosting the higher end. And remote work permits. That obviously increases the pool looking for flexible, well-connected spaces with good internet.
Makes sense. And foreign direct investment, FDI. Your sources connect this to where you should rent. How?
Well, FDI often goes into big projects, right? Real estate infrastructure,
Mm-hmm.
think new metro lines, huge business parks, massive
Oh,
malls.
okay.
So if you see a big announcement about major investment in an area that's maybe a bit further out now,
Hmm?
that's a signal. A savvy renter, thinking like an investor, sees that and thinks, okay, demand for housing here is likely to spike.
Okay.
And your sources suggest this often happens maybe 6 months before the project is actually finished.
Why then?
Because people anticipate, right, easier commutes, new jobs, better shops.
Yeah.
They want to get in early before prices jump.
So you're looking ahead, anticipating future demand based on these big economic signs. That really does sound like thinking like an investor.
Yeah, it is, absolutely. Projecting future value based on what's happening now and what's planned.
Which leads us perfectly into the practical side. The strategic tips highlighted in the material you sent. How do you actually do this? Rent like an investor.
It really starts with that mindset shift Dr. Ghamari talks about. You're not just consuming housing, you're making a kind of micro-investment decision every month with that rent payment.
Okay, so how do you put that into practice? Tip 1 in the material. Project the yield. What does that mean for someone renting a room?
It means looking at your choice with the same kind of critical eye an investor uses for an asset. Asking questions like, is rent generally stable here, or does it jump around wildly? Is this building or even the whole area maybe facing an oversupply soon? Lots of new towers finishing nearby. Or are there big projects elsewhere that might pull people away from here, maybe affecting rent or just the general vibe later? You're basically trying to look ahead, anticipate bumps in the road, or maybe advantages, protecting your investment in where you live. It's like asking, based on everything, will this rental choice hold its value for me over the time I plan to stay?
Right, you're stress testing the decision, protecting yourself from surprises.
Exactly. You're the investor in your own living space.
Okay, and another big one mentioned is using data. Seems obvious with platforms like Butte or Property Finder, but your sources say go deeper than just browsing. How?
Yeah, it's about using those platforms, A-Land, Butte, Property Finder, as actual tools for insight, not just picture galleries. Track the price trends over time for the kind of room you want and the areas you're considering. Don't just look at today's price, look at the demand ratio. Are searches for private rooms way up compared to shared rooms right now? Or is it the other way around? What does that tell you? Monitor broader patterns too. Are certain groups, maybe freelancers after a visa change, suddenly searching more in one area?
And there was that specific point about tracking search volume spikes.
Yes, that's a sharp one. A sudden jump in searches for a particular area or building type on these platforms. That can be an early warning sign. It signals that demand is heating up. Maybe rents are about to inflate there. People are looking hard, reacting to something. If you're watching that data, you might get a heads up before prices fully adjust.
That's clever, using search trends as a leading indicator for rent. What about this transit time index concept? Never heard that applied to renting before.
It's a standard tool for urban economists, actually, and super relevant for Dubai with its sprawl and traffic. It's about calculating the real cost of your commute time and money and factoring that into your rent decision. So you add up your daily travel time, say an hour round trip, then you try to put a value on that time. What's your hour worth? Or just how much do you hate commuting?
Oh, yeah.
Then add the actual cash cost, fuel, select tolls, metro fare. That total is your transit burden.
Okay, got it. And then,
You use that number to compare options. Maybe room A is cheaper rent, but has that high transit burden. Room B is closer, rent's a bit higher, but the transit burden is way lower. Does room B actually save you money overall when you factor in the commute cost? And critically, does it save you time? That saved time, that's valuable yield too. Better quality of life, less stress, more free time. It doesn't show up on the rent comparison sites, but it's real.
that makes complete sense. Total cost of living there, not just the sticker price. Okay, another point. Visa and compliance. Sounds more legal than economic.
It's definitely both, and it's fundamental to the stability of your rental investment.
Yeah.
Legality equals stability. You absolutely have to check if the landlord can give you an Ejari registration. It's mandatory for your official residency stuff, like renewing your visa. And it gives you legal standing if there's a dispute. If you're renting from a company, check their trade license. Are they legit? And really read the contract clauses on early termination or what happens if your visa gets canceled. What's your exit plan? Renting from some dodgy, unlicensed setup might seem cheaper up front, but the risks are huge. No legal protection, no official proof of address. It jeopardizes your personal and financial security.
Okay, really important. What about co-living ecosystems? They seem to be popping up a lot. Your sources mention them.
They are, yeah. And they represent a different economic proposition, especially good for some types of renters. You get your private room, but access to loads of shared stuff. Fancy kitchens, gyms, pools, maybe co-working spaces, social events. They're often ideal for, say, remote workers, people new to the city, entrepreneurs, people who want that built-in infrastructure and maybe a social scene without setting it all up themselves.
And the flexibility aspect.
That's key for that group. Many offer shorter contracts, month to month even. It's often plug-and-play furnished, bills included, internet ready. So economically, your sources suggest for the right person, you might get more utility per dirham spent, more value if you factor in the flexibility, the included facilities, the community aspect. You're buying a whole living package.
Right, and something that sounds simpler, looking at your neighbors, how is that economic?
Yeah, it sounds like just common sense, right?
Yeah.
But there's a definite economic angle. Your neighbors shape the social capital and the
Yeah.
living standard of the place, and that has value. A building full of long-term residents, maybe professionals, often means better upkeep, less noise, more security, because the residents care and have leverage. Now, contrast that with a super cheap room in a place with constant turnover. Maybe lots of unregulated short-term lets, landlords who are never seen. That can mean noise, mess, security worries, things not getting fixed. The price you pay isn't just the low rent, it's the hit to your quality of life, the depreciation of your living environment. You have to factor that in to your personal yield.
Okay. The total experience cost, not just the rent check.
Exactly. Another strategy, understanding the submarket's investment cycle. This sounds like buying property in an up-and-coming area. Pretty much, yeah, but applying it as a renter. Positioning yourself smartly within that cycle. Think about areas mentioned in some material, like Dubai South or DIP, Dubai Investment Park. They're earlier stage developments. Right now, rents might be lower there, but the projected value is high because of huge future plans, new airport phases, business hubs, tons of new housing.
So renting there is a calculated risk, an economic trade-off.
Absolutely. Could be a great move if you plan to stay in Dubai long-term and you're okay with maybe less than perfect public transport today, banking on it, improving significantly. To do this smartly, your sources say look at the official project timelines, check developer master plans, talk to agents who specialize there, get a feel for the growth curve. It's about aligning your rental period with the area's expected boom.
Thinking long-term even for renting. Okay, negotiating smarter. How do you do that effectively based on the material beyond just asking for less rent?
This goes right back to the investor mindset. Think like the landlord, like Dr. Ghamari suggests. They've got costs mortgages maybe. They want reliable tenants, full occupancy. They hate vacancies, especially during slow seasons like summer.
Right. Use that knowledge. Offer something they value. Paying 6 months or even a year up front. That massively reduces their risk and hassle. That often gives you real bargaining power for a discount. Got other friends looking, maybe suggest a referral incentive. That saves them marketing costs. And sometimes pushing to get utility bills included is actually worth more to you than a small rent reduction, especially if you use a lot of AC or what predictable monthly outgoings. Find those win-wins based on their economics.
Good point. Utilities can be a big variable cost. Okay, and using short-term flexibility. Seems like a cautious start.
Yeah, your sources frame this like agile investing. It's smart risk management. If you're new, unsure about neighborhoods, don't want to commit for a full year right away, start short. Get a 3 or 6 month lease somewhere fairly central, easy to get around from. Use that time to properly explore, experience different areas at different times of day, check out the commute, talk to people, scout your long-term options while you're actually living there.
Reduces the chance of making a costly mistake up front. Saves time and money later. Exactly. You're gathering real-world intel before making the bigger commitment. Less risk.
And the last tip, monitoring currency fluctuations. This is key if you're paying from an overseas account, right?
Definitely. It's an economic factor renters often miss, but investors track closely, as your material notes. If you're sending, say, euros, pounds, rupees every month to pay rent in AED, those exchange rate movements add up. It can easily shift your real cost by, say, 3 to 7% over a year, depending on how volatile things are.
Which is not insignificant on a year's rent.
Not at all. So, thinking like an investor hedging risk, if you happen to see the exchange rate looking particularly good for you against the dirham, And if you have the cash flow, consider paying a few months' rent in advance then, locking in that favorable rate. It's a small way to hedge currency risk on a personal level.
Okay. So wrapping this all up, what the material you shared, including Dr. Gamari's viewpoint, really drives home is that renting a room in Dubai, it's not just finding a place. It's a strategic decision. It benefits hugely from thinking like an investor.
Yeah, by looking past just the monthly rent figure, by understanding these bigger economic forces at play, the market dynamics, and by actually using these kinds of strategic data-driven approaches we talked about, you can do more than just get a roof over your head. You can protect yourself financially, avoid nasty surprises. You can optimize your housing costs as part of your overall budget. And honestly, just improve your quality of life in what is a really dynamic, exciting city.
So what does this all mean? It means that kind of careful thinking you might apply to buying stocks or investing in property, it probably makes sense to apply it to signing your next rental contract too.
And maybe this raises a final thought for you to mull over. How might applying this kind of micro-investment thinking, like we discussed for renting in Dubai, how might that change the way you approach other big personal financial decisions? Or even just how you understand the housing market in other major global cities facing similar pressures from migration, investment, and development?
It's something to think about for sure. We really hope this deep dive into the sources you provided has given you a fresh perspective on tackling the Dubai rental market. Thank you for joining us.